What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 15th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, we've got a ton of things to talk about in regards to crypto and traditional markets. To start, I want to spend some time to make the case as to why I'm still bullish on crypto, even after the past week of price action, but that I am expanding my time horizons before we really start to see some of the major gains for the next cycle. And we've got a lot of other things to talk about as well in regards to that topic. But in the sense of traditional markets, we're going to be diving really deep into Corona, and I want to talk a lot more about my personal perspective on it, why I believe that this is the catalyst for one of the most severe recessions we're going to see in the 21st century, and along with that as well, talking about the lack of response that we've had in the United States and the misfocus of where we're putting our priorities in dealing with this crisis. So we've got a lot of things to discuss, but I want to let you all know real quick that this video is sponsored by eToro. Now, for those of you who may not know, eToro is a social trading platform. It allows you to interact with other traders across the world. And for US traders, they recently launched their cryptocurrency trading feature as well as their copy trader feature, where you can copy a wide range of different people in the cryptocurrency space, such as myself, by simply checking out their profile, looking at the stats of their returns, and then clicking on the blue copy trader button if you're interested. So check out the link down below in the description if you're interested to learn more. All right, so diving into crypto markets, guys, not much dramatically has changed here in the last 24 hours. I don't want to do too much in-depth analysis on altcoins. Most are in neutral territory right now, between 1% to 2% to the upside or downside. And the same goes here for Bitcoin. Bitcoin is not seeing any crazy changes, just down 1% over the last 24 hours. I want to go ahead here, though, and talk a little bit about our longer-term time perspective here. Now, I think that the recent sell-off that I think we can generally assume, again, we'll never have a foolproof story, guys, of what happens, because we never know who's selling on the order book, what's happening here. But I can tell you all, right now, I don't have any other rational explanation right now to explain the kind of record level of sell-off we saw here on Coinbase, on Binance, and a lot of other exchanges. People haven't really taken into account this week's volume that we've seen. The sheer amount of volume we saw can only really be explained by the sell-side pressure most likely to come from the Plus token Ponzi scheme. Now, for those of you who don't know what this is, I highly recommend reading into it. It's similar to BitConnect in the sense of the kind of scummy projects that took over and took advantage of the cryptocurrency space, and a lot of new kind of investors or people who had little to no experience in financial knowledge or technology. So again, research a little bit into the Plus token Ponzi scheme. The sheer amount of Bitcoin, Ethereum, and EOS that they had that they eventually were looking to liquidate and sell, and knowing that there are exchanges across the world that will let them trade, it doesn't shock me that this would be what led to this price sell-off. Not to mention as well, a lack of spot liquidity builds a ripe environment for the order book to be cleared through very quickly. And outside of that as well, with coronavirus going around, we have no doubt here at the DataDash channel, and I bet many of you in the community don't have a doubt, that this has caused a cash squeeze, meaning people are going to sell their Bitcoin or other miscellaneous assets that might be seen as speculative or emerging assets and turn for cash, in this case, to cover short-term expenses and also cover themselves in the case that something bad might continue to happen in regards to coronavirus. So just keeping that in mind, right? We understand this sell-off to a degree has definitely changed the landscape for price analysis of crypto. And I think this is going to prove to us here that we might be jumping the gun a little bit here with our expectations of the halving event coming up, as well as our understanding of Bitcoin's fundamentals and its fixed monetary supply in becoming a store of value and a hedge here. Right. Now, many of you might know, if you take a look at gold back in 2008, if you look at a lot of assets that were seen as hedges, in many cases, gold and other hedges sold off during the initial phase of the recession. And this tends to be that during these times when we have what's known as a credit crunch, or basically, simply put, demand for cash, you're going to see people sell off all assets across the board. And as again, I mentioned, it's one of the three components that I believe led to the sell-off being so dramatic. All of these things coming in at once was not good for Bitcoin. And I believe even during the halving event that some people bringing up the challenge that, we're not going to see instant, I would say a sense of instant gratification or instant rally in Bitcoin post-halving, I think that's a very fair point to keep in mind. We've talked about that even in our previous model, that it would take a matter of a couple of weeks to a couple of months to really start seeing it reflect in price. It doesn't cause an immediate shock overnight, but at the same time as well, we can't really price the halving event in until the halving event happens, right? So Anyways, the key point here I want to state here is keeping a relatively neutral view. I'm still confident on cryptocurrency markets going into 2020 and 2021. I haven't been selling off my positions on mass, guys. I've been holding in crypto over the last couple of weeks as we've been going down here, just like when we were going up. I haven't really adjusted my positions too much, maybe reallocating in different positions across the board, but I'm still mainly exposed to altcoins and mainly exposed to crypto out of any other asset class in the world. Okay, so I hope that brings some confidence there that I'm still standing by my position. I got my money where my mouth is. But the key thing I want to emphasize is that right now I think we're building into a little bit of a longer term wedge here. Now, I don't believe we're going to come all the way to the tip here in 2021 down here at the same price range right now. But I do believe we could zigzag between the line of resistance and this line of support here that's now been adjusted from some of the more previous significant lows on the standard chart here, right? Again, I know some of you might say this is tedious, but I think that this is really the next kind of levels that we have to look for now, because to be fair, even though we understand what might have led to this sell-off, with COVID-19 just generally being a general fear right now, and then also this sell-off being one of the starkest ones we've seen in crypto history, I think it's going to change the dynamic here. It's going to change the dynamic for miners, it's going to change the dynamic for institutional investors, and it's going to change the dynamic for the general perception of markets across the board, or excuse me, how people analyze the cryptocurrency markets across the board. So very key thing to keep in mind. But I would say not to fear too much, because on the logarithmic chart, there's a very interesting correlation with the last sell-off. Now, bear in mind, over a longer period of time, we see two similarities in between both of the bottoms of the last two cycles. This cycle that we're in right now and the previous one. The first thing I noticed is that we had a generally rough 22 to 26%, again, a little bit different, but relatively close, difference from the first initial low to the second significant low before we entered into the next cycle. This is something that I think is very interesting to take into mind. And I noticed as well that the time frame is nearly double, over 15 months versus 7 months. And this to me signifies that we're going to be probably having longer cycles in this case, where the halving events in this case do become even more and more significant over time as we grow into a larger and larger market, but that it's going to take a longer time for this to be reflected in price, as we're talking about much larger markets that require much larger volume to get to the kind of exorbitant 50, 100K or $1 million Bitcoin price figures that some people have proposed. I think that that's a very important thing to take away. And interestingly enough as well, notice how through both of these periods of time, right, we had two events here where we made contact with the 200 week, both of which going below the wicks here, but closing inevitably at the end of the month. And that looks exactly like what we're doing right now, a slight dip below the wicks back here in December of 2018. And here as well, coming up and looking like we might close above 5,500 for the month here, with a wicks breaking down below quite significantly like we did back here, right? This to me seems relatively familiar with the past. Again, I might be just trying to draw simple conclusions here, guys. You might agree or disagree. I'd like to hear in the comments down below, but I really do think this is something that's important to take into account. The difference in the low to the secondary low here for the bottom of the cycle. Could this be the second higher low that we've been looking for in this case that we really haven't gotten yet, as we had a premature rally that was one of the most significant upward ticks in Bitcoin history, exiting out of the first significant low in the accumulation phase? Could be a very good thing to keep in mind. All in all, though, guys, we're still on par here for where we should be. Again, on the cheaper end here, no doubt, but definitely where we should be in the sense of the stock to flow. We're not breaking off too significantly. You can see here the actual model variance is signifying we're not that far away. We've been further away before. So anyways, nothing to fear here in that case. And then also, you guys know the rule. When other people are fearful, we get greedy. And the greed to fear index is what we should be focusing on. See, this is what happens, guys, when I'm talking for like 20 minutes straight. I'm going to stumble. I'm going to miss a point sometimes, but I like to keep it this way. I like to keep it organic. And if you guys like it that way, then drop a like. And if you haven't already, definitely subscribe. And I was speaking of this, actually, I wanted to mention this because I know I'm going to forget it. I wanted to ask you guys if you wanted me to do some live streams this week. So if you would like to see some live streams this week, I was thinking maybe like through Monday through Friday, instead of doing standard daily updates, we do some live streams and we take some questions from you guys in the chat. So would really like to do that, especially seeing as everyone is definitely getting more towards a position of quarantining or staying home or working remote to some degree. I would love to do that, keep everyone entertained, and try to answer some questions as best as I can. I know I'm not an epidemiologist in this case. I'm not an absolute expert, but I think I have a decent understanding of the kind of exponential potential and growth for COVID-19 and just talking about this issue in a very moderate fashion, and also taking some precautions to be prepared for. But anyways, I digress. If you guys see a comment down there that recommends it and you want it too, definitely leave a like on it so I can know that you guys want me to do some live streams this week. All right? Now, going on here to talk about COVID-19, I want to go ahead and just give an update on the scenario and really talk about, I wouldn't say so much an updated perspective, but I don't think I've made it very clear because, again, people get very hostile over this topic, and I understand it completely. I'm quite flustered right now with the lack of response in the United States and abroad across the world. I don't think we took measures early enough, and look where we're at right now. We're with a problem that we can't seem to control to any degree. And only a few countries, for example, a lot of those in Asia like South Korea and Singapore and Japan, have taken proper measures in this case and have done it in a fair way through proper testing, through proper quarantining. And outside of that as well, we've seen in Italy as well, after a severe outbreak in the sense of cases and deaths and the hospitals being flooded, they've finally taken on a multi-week quarantine here, which I think was the proper step to go about. But in the United States and in Europe and many regions across the world, such as South America, nations throughout Africa, and then also areas in Asia like Australia, we have done little to nothing to combat this. And I have to say, I'm not shocked by any degree, but this is something that we need to take into account because at the end of the day here, right, we're not even getting proper testing in the United States and other countries, and we're about to get to the point where total cases in other locations are about to escalate past China. This is a breaking point here, guys. I mean, we already know that the numbers are well above this, right? And we know that the Chinese numbers are probably fabricated to some degree, no doubt about it. This isn't even just being a conspiracy theorist. This is just being rationally skeptical that the numbers are not going to be, presented as highly because we're not doing the proper amount of tests. And we need to think 14 days out from the incubation period. There are a ton of people who don't think they're sick that are really sick right now. And this is, again, understanding how to look. There was a really good quote here. Understanding where the puck is going. This is a quote I heard. It was on another YouTuber's video and stuff, but I really liked the point that they brought up. It was an old famous quote from a financial investor that basically says, we need to be able to look where the puck is going, not where it is currently or where it's been, right? It's basically looking at a couple of days, a couple of weeks, and a couple of months, and how severe this is going to be. If you don't understand right now that this is not the flu, and that this is something much more significant and much more viral, with a virality rate that's about 4 times as high as the common flu that we get on an annual basis, then you need to readjust your thinking and really understand the significance of this, guys. Plain and simple, right? Now, we've been drilling that here on the channel. I've definitely said that this is going to stunt global growth. It's going to lead to some deaths across the board. And most importantly, it's going to weigh down on hospitals and a lot of other factors that we rely on a day-to-day basis because there's just going to be an overwhelming amount of people that need to be hospitalized, especially elderly people. So I'm going to go ahead here, and before we dive into this kind of analysis of what I believe it's going to do for markets, I want to go ahead and share a few quick things with you guys that I think are important to understand. The simple things that you can do to help stop this spread, because quite frankly, governments are likely going to be too late in responding and taking on precautions of quarantining, making people who are doing non-essential work on a day-to-day basis for a mass populace to stay home. They're not going to keep you from working and stuff. So here's the things I would say. If you can't stay home, if you can't work remote, right, the key things you should do throughout the day-to-day basis, very simple things. I'm not proposing to be a genius in saying this, just wanted to make it very clear for those who may not know. Wash your hands whenever you can. When you're interacting with people, do not shake hands. There are a lot of other simpler ways to interact. First off, not interacting at all, right? It sucks, but this is a period of time where keeping to yourself and keeping social distancing from people is probably one of the best things you can do. But if you do have to interact, you can always do the elbow, which a lot of people are doing, or a high five. All of those reduce the actual virality of being able to spread the coronavirus or any other virus or bacteria for that nature. So limiting contact is another big thing outside of already keeping keeping your hands clean. Outside of this as well, another significant thing to keep in mind is that you should not be going out when you don't need to. There are a lot of people who are over exaggerating and trying to go and purchase things at the store and over consuming, when in reality, it can be good to just go simply purchase the things that you need, the essential items. Don't panic buy, and basically stay inside over the next few days when it's not necessary, right? To go outside, right? These are all simple things we can do to reduce our chances. The big issue is there's a lot of people rubbing this off as the flu. And a lot of people going out to restaurants, to bars, acting as if it's nothing. And the worst thing that I see is that it's older individuals in this case that I've seen. That's what scares me the most, right? I don't care if someone my age really gets sick and they went out and ignored this. Sorry. I mean, there's people who are going out on flights and trips and abusing this period of time and stuff when really they should be staying inside. But I do fear for older populace in the United States and in other countries. We've seen it in Italy and areas where there is a big retirement population. They are more susceptible to this due to other issues within their immune system that makes them immunocompromised. So please make sure to stay inside when it's not necessary to go out. Okay, guys? These are just some key things I wanted to share. I know we've got a channel and a presence here on YouTube, so I wanted to make those things clear for those who may not see it. Okay? We need to think about the exponential potential of this if it is not treated initially in this case. So again, very big point to keep in mind. Now, for those of you who are interested in the market perspective here, we've got to talk about this here. There's really kind of two ranges, good and bad, of scenarios that I see. I think we're clearly in a recession here. If you don't see from the total stock market Vanguard ETF here that we're entering into a recession in a matter of 2 months, dropping down as much as we have, then that's fine. Again, guys, everyone can have different perspectives, but quite frankly, I don't see how you can't see this being the stirrup of a recession. I mean, we are seeing, even if we're smart enough and did a quarantine for the next 2 weeks, it would stunt global economic activity, right? So this is going to definitely, as much as we're going to be providing liquidity and bailouts and all that kind of stuff, it's not going to be able to sustain the kind of bubble that we've built here. This is enough of a needle to pop the bubble that's been built up over the last 12 years and the longest economic expansion in history, right? And we can see here in the volume that that's being reflected very significantly, already outpacing here on the VTI ETF, for example, above what we saw back here in December 2015, all the way back to some of the record highs here that we haven't seen since back here in December 2018 and all the way back here to 2008. Okay, so we're seeing significant volume. We're not even done with the month here, so we need to keep that in mind as well. Just looking at this chart, the kind of exponential growth here in sell side action, right? So we've talked about these things here, and these are the two ranges that I'm looking for. So a lot of people have asked, Nick, have you purchased any stocks? Are you looking to buy anything at this dip? And quite frankly, no, I'm not. I'm not only betting much more on hedges like gold and silver, as we see commodities at a much cheaper range compared to equities here, even after this sell-off. But along with that as well, in my case, my time preference is much larger here. I'm looking in this case to see anywhere from a 45 to 55% correction. And interestingly enough, these are very significant levels. This is the support range that was tested multiple times from 2014 all the way over to April of 2016. And along with that as well, the further range here, the more bearish case scenario that might come over a longer term period of time, up to potentially 40 months, would be coming down here to the June 2007 highs, or over here as well when we revisited back to the highs in 2013. These are the levels I'm looking for here because they average around a ballpark range of a 50% correction, which is historically significant. And notice I'm not doing any crazy complex TA, guys. You don't need to make it complex. If you're a macro trader like myself, you're waiting for that opportunity range. We don't start adding opportunities until we get down to this ballpark range, right? At least that's for me personally. You guys have to choose what you want to do. But I'm not touching equities until then. For me personally, I don't feel a need to do it right now. I don't see that much opportunity at these levels. So anyways, again, you guys might disagree. That's just generally my perspective on it, and I wanted to provide it to you in case you wanted to hear it, right? Now, the next thing I want to talk about here in the sense of the kind of broader case of the market, okay? Take a look here at 2020's performance. This was back, the most recent numbers here, March, I guess the close of the market was on March 13th, but I would say March 12th for March 13th because it doesn't seem to show the rebound we got the other day, to be fair. But comparing this to 1929 and 1987. This, to me, has to be one of the most damning charts out there, because this is basically taking in any year where we had basically 24.6% drawdowns since 1928, the first 100 sessions here, right? Look at this. I mean, this is not only the most premature sell-off, right, and in the sense of these two significant times in financial history, but we have already outpaced these. Bear in mind. Now again, factor in the rebound. Yes, we did get a little bit of a rebound the other day after the Fed and the Treasury said unlimited liquidity. Now I want to go ahead and talk about that in a moment, as we do have that up here on one of my tabs, because it's going to lead me into my point here about our misfocus on treating this issue. But again, just taking a look at the significance here, the correlation of 1929 to where we are currently in 2020. Very, very interesting chart. And again, we might get a rebound here over a course of 2 or 3 months, but they also could roll back over again just like they did in 1929. Right? This is the interesting correlation I want to talk about. Now, I want to go ahead and talk about why I think it's absolutely reasonable to see equities go down 50%. And also why we could see an inflation-adjusted third low from the two previous bear markets, back after the dot-com craze, where we set a significant low here for equities, and then also here after 2008. A lot of people don't look at stock charts or indices, and they don't look at them in inflation-adjusted numbers, right? This is very important to take into mind here, because back here since 1964 all the way here to 1984, we had a 20-year cycle in this case from the peak, right? Generally speaking, from generally this area down to here, about a 20-year cycle where we actually set significant lows, inflation adjusted. The chart might have looked decent, might have pushed sideways. It doesn't matter. For your dollars being adjusted for inflation, we went from a range of 8,000 down here to 2,000. And now we're sitting here at 32,000 here. Could it be that we get a significant correction here adjusting for inflation, where we get a standard 45 or 55% correction across the board in equities, but we also have to factor in for mass inflation of the dollar in order to get us towards a third significant low that puts us even lower in the sense of real valuation of the stock market than we were back in 2008. Even though on printed numbers, right, we're setting a higher low. That's the important thing to keep in mind here, guys. And take that into mind when we see Steve Mnuchin from the Treasury stating that they are working towards providing unlimited liquidity. Now, you're reading that right. And there's no other article here, right? We don't need an article to talk about this and what Steve Mnuchin means by unlimited liquidity. This means that the Fed has realized something, as well as Steve Mnuchin and the Treasury alike. Central banks across the world have exhausted their interest rate policy. The last thing that the United States wants to do is push interest rates not only to zero, but down to negative, because that's going to mean that the world reserve asset, U.S. Treasuries, from 1 month maturity all the way up to 30 years, is going to be likely entering into negative territory. And if that happens, you can kiss the entire financial system goodbye in many ways. I think a lot of people would predict and be confident in predicting that this is going to be a disaster for the U.S. economy. So the last thing the Fed has really to do here is to start printing money. And they're going to be implementing QE like we've never seen it before. Helicopter money galore, filling the punch bowl until it overflows, and letting the can just get kicked down the road, the party to go on. And they think in this case that it's going to be okay, that it's going to push equity markets higher, that we're going to be able to supplement growth in this asset bubble that we've built over the last 12 years and really over the last few decades, to be fair, as central banks have become more and more part of the economy. But at the end of the day, I have a feeling it's not going to work. And even though they might be able to artificially push the stock market higher, the sheer amount of dollar debasement is going to showcase through this chart that equities are not going up, that people are not buying into equities as the dollar gets diminished to nearly nothing. It is going to push asset valuations on an inflation-adjusted basis to new lows, and we are going to see a further correction in equity markets once this realization comes in, and once we realize that quantitative easing isn't the proper solution. buying assets doesn't help the underlying economy. It can help to a degree in the sense of increasing people's net worth and therefore maybe their collateral or willingness to be able to get credit. But at the end of the day, if average everyday Americans are not consuming, if average everyday Americans are getting laid off, if we have higher unemployment numbers, if we have higher jobless claims in the economy, and we have less people being able to afford the basic essentials from where they already can't afford many basic essentials, we're going to have a worse off economy. And printing money and giving it to Wall Street investors, or giving it to banks in this case, to go continue the same risky, speculative gambling that have led us into this problem in the first place, is not going to fix the problem. Again, these are the kind of comments here that I really want to emphasize when I say that we're focusing on the wrong solutions for this problem. We're focusing on financial solutions. I have no doubt that at this period of time, stimulus could be beneficial, especially if over the next 2 weeks we go through a mass quarantine in the United States. If we decide to basically keep everyone home that's non-essential work to provide for the basic necessities that we're going to need for the next 2 weeks, I would say, for example, people working at power plants, the water plant and treatment facilities, people producing goods and services that we need to consume on a day-to-day basis, like food, all the things, basic essentials, cleaning supplies, and then also maybe, for example, delivery in that case, to be able to deliver these services across the U.S. If we don't do that right now, this is going to become a catastrophic issue that no amount of unlimited liquidity is going to fix. And more importantly, if we inject unlimited liquidity in that kind of environment, more than anything, it's going to debase the purchasing power of what little left people have to be able to buy the goods and services that they're going to need in this time. And it's going to cause a massive catastrophe if we have this ultimate pressure for unlimited liquidity and not unlimited standards of quarantining and dealing with this issue early on. It's something that just irritates me to no avail. This was, for example, I wanted to show something that the Time had put out. I usually don't like a lot of mainstream media publications, but I will say the Time actually pulled from a really interesting modeling laboratory here that showcased, I'll actually get the official name here because I want to give them credit where it's due, the Laboratory for Modeling of Biological and Socio-Technical Systems at Northeastern University. They provided over 100 different coronavirus scenarios that have been generated in order to help the CDC understand how significant of a reaction that we could get or spread we could get across the United States alone. This is just the US, bear in mind, if we go about controlling this in different degrees of surveillance and intervention, okay? Now, you guys know I'm a libertarian at the end of the day. I usually don't believe in excessive government intervention, but I'll tell you this, when it comes to something like a pandemic, this is where the libertarian view of limited government steps in, because that limited government is necessary to deal during these massive crises. There needs to be some sense of authority here. There needs to be some sense of control, as many people are not taking the necessary precautions for this. Many people are either ill-informed on the issue or rubbing this off as the common flu, and it's not. And we can see here from different scenarios, right? If we control this properly, sometime in April, by the end of the month here, stepping into May, we can have a limited number of cases in the United States where in common areas where there's a large population like New York or California or Florida or somewhere up here, for example, in Illinois like Chicago, we could see that these numbers can be controlled to a degree. And then hopefully sometime by the end of the year, we could deal with this and it won't be a major issue. We can avert a national crisis, an international pandemic. Or we can not take care of this. We can think that throwing money at markets is going to fix the issue and have people get more and more crazy, more and more out of control at stores than they already are, more hospital beds filled, more people dying, more people getting sick, more inefficiencies at the workplace as people, rather than just working remote and staying home and being safe and healthy, are now sick and bedridden. This is a likelihood that we're going to see here if we don't get intervention soon over the next week, guys. All right. I want to make it very clear because I think some people don't think that I've held this view for a while. I have. The issue is I was much more confident that we'd be responding quicker in the United States and a variety of EU countries and in South America and in other parts of the world, like our Asian counterparts in this case. But I haven't seen it. And I'm real disappointed. I'm real disappointed in the lack of effort that we've taken across the board to build a strategic solution between public and private partnerships, between our federal agencies and nonprofits, to make sure that we can go about doing this in a strategic way, to get proper testing out there, to make sure people are staying inside when it's not necessary and working remote if they can. We should be using the leading and cutting edge technology as Silicon Valley. Companies should be taking leap forwards in this case and using conferencing technology to work remote. We should be doing a public-private partnership. This is something I came up with last night with Amazon, where the government should subsidize additional drivers right now to make sure they go through the proper cleaning procedures, to make sure they're not going to spread anything, make sure that they get tested properly so that we can do e-commerce deliveries across the United States. We have the infrastructure. Amazon exists. FedEx exists. We have all the resources to do this, where people who are non-essential employees during this time of quarantine and the spreading of the virus could stay home, right? It's a bold plan. It's a very, very, again, far out plan that I know will never get implemented, but we could do it. We have all the resources to do it. And it's just a matter of making sure we all get on the same page and get those basic facts across to people, that this is something important to understand, that it's not like the common flu, that this is a pandemic right before our eyes, that we haven't seen the likes of back since the early 1900s. So, anyways, I rambled on enough, guys. I hope you all enjoyed this video. If you did, drop a like. And if you guys agree or disagree with me, feel free to leave a comment down below. Let me know your thoughts on this. I might be overthinking it, and I also might be still, again, disproportionately not seeing the full picture here, and maybe not understanding that it's even more significant, right? Again, I'm just trying to provide my perspective from the numbers here, guys. I'm not really caught up in the emotional side, but I do get a bit agitated when people, I hate to say it, I think when people rub things off, that inevitably can lead to furthering issues. I think about it like this. It's almost like saying, for example, yeah, drunk driving's a problem, but I'm going to go ahead and drink a few beers and get behind the wheel, right? What's the likelihood that I hit someone, right? That's the kind of mentality here. This is something that's important and severe to address. And it's why I believe out of many select scenarios, very few select scenarios, that this is a time and place where governments need to intervene, and they need to be strategic. We need to deal with this sooner rather than later. So, anyways, I've gotten heated up a little bit about it, guys. Hope you guys want to see some live streams over the next few days. I'm definitely down to do it. Again, leave a comment down below if you'd like to see it. But until the next video, guys, wash your hands, keep your distance, don't go outside when you don't need to, and make sure to help your family members, especially your elderly, during this time period. And I'll see you all in the next video. Stay tuned.